Hey everybody, thanks for tuning in. In this video, I would like to discuss how you guys can benefit from this equity curve that you see here on the right hand side. And as you can figure, the y-axis is showing the percentage in profit, and then the x-axis is showing the period of time. So you can see over the period of time between May and November, this equity curve has reached 63% in profit, right? So why am I so excited about this equity curve? Because you see that the corrections, the drawdowns are very low. So a drawdown is basically a lost trade, if you will, right? So, and you will see here on the left hand side, the maximum drawdown was 2.4%. So you see the red trades are drawdowns, right? And the green ones are profit. So, and if you are familiar with Forex, you would typically see a much higher drawdowns. The same would apply to crypto trading, even more so with crypto futures, right? You will see a lot of volatility in your equity curve. So, and as you can see, the CAGR with this kind of trading is 151%. So CAGR is basically the compound annual growth rate. So this is what you can make per year if you join this kind of trading, right? And the Sharpe ratio is beyond excellent, right? Because Bitcoin is this year at a Sharpe ratio of 4.35, and here we have 8.9%. So how is this possible, you might ask yourself? As I mentioned, this is not Forex, this is not crypto trading, crypto futures. This is crypto options. So let me explain. So in spot trading, you basically just go long. You buy an asset and you hope this asset to go up, and then you sell at profit, right? So you buy low, you sell high. That's it. That's all you can do. So with futures trading, you can also bet on the price decrease. So you can go short. So you can go long and short, and typically you would add leverage, right? So leverage is a risky thing because you have the risk of getting liquidated. So if you trade with a leverage of 10, let's say, and your asset grows or falls higher than 10%, then you will be liquidated, or you will have to add margin, right? So you can lose more than you invest, basically, right? Because if you get a margin call, you will have to add more money. So now with options trading, you can go long and short, and there is an additional dimension, which is time. So you can go long on Bitcoin. So today Bitcoin is 97K. So you can basically say tomorrow it will be 98K, right? So, and there is no leverage involved, and you will get no margin call, right? And that's what makes crypto options less risky than futures trading. So let me show you how this works. So let me go to options Bitcoin, right? So we are here on Bitopex.io. So that's a trading platform for crypto options. Currently you can trade Bitcoin and Ethereum, but in future, actually very soon, you will be able to trade Solana as well. So that's a trading platform like Deribit, like Binance, like Bybit, right? So what you can do here, you can buy a call and you can buy a put. So a call is basically when you bet on a price to be above a certain strike price, right? And if you buy a put, you basically bet for the price to stay below a certain strike price. So let me go to the table view so I can explain it a bit better. So let's go to 100. So that's our strike price that we are looking at. So on the left hand side, you can basically buy a call. On the right hand side, you can buy a put. So here in this table, you see the premium price. So the premium is basically the cost of that particular trade, right? And you see the cost of that trade is very low compared to the put, right? Why? Because this trade is more likely, less likely to happen, right? So if it's less likely to happen, then it's cheaper for you as a trader, right? So if you bet on the price to be above 100K, you buy this premium, right? You pay this premium, and if the price goes to 101K, for example, you will get $1,000 in profit. And here you see the implied volatility, right? So here on the right hand side, the implied volatility will be 94, and you basically bet on the price to stay below 100, and this is very likely. That's why the premium price is so high, right? So this is buying calls and puts, but you can also sell calls and puts. And here you will see an additional table, additional column that is showing the margin, right? So now we are in a risk area similar to futures. So because if you sell a call, you basically say that Bitcoin don't go above 100. So pretty much the opposite of buying a call. You say don't go above 100K, right? And this is pretty likely. That's why the premium price is so low, right? But on the other hand, you will have to have this margin, almost $12,000, right? Why? Because if Bitcoin will go above 100, let's say 110, then you will lose 10K, right? And that's why you need a 10K margin, similar to futures, right? So that makes selling calls and puts a lot riskier than buying calls and puts, right? So now you will say, man, this is way too complicated. I cannot navigate this. This is rocket science. Well, the good news is there are people that know everything about crypto options, and they know how to navigate those. So, and typically they will not only open up one trade, they will open 2 or 3 trades. And those additional 1 or 2 trades will hatch the original trade, right? So, and this way, there's no way to lose everything, right? So, and that's why you see those low drawdowns. So there is a very limited risk, actually no risk that the whole account will be crashed, right? Because you have several trades that will hatch your original trade. So, and let me go back to the equity curve that we looked at. So we go to copy trading. So what you do here, you basically copy a seasoned trader, right? And this trader was able to achieve this kind of results that you see here. And I'm looking at the 0 TDE strategy, 0 days till expiration. So the strategy they use is they have realized that Bitcoin is losing its volatility outside of US trading hours, because meanwhile a lot of institutions are trading Bitcoin. So during the US trading hours there is a lot of volatility, but outside of the US trading hours there is a lot less volatility because the big players are out. You know, the institutions, the funds, they are all out, right? So that's why volatility is decreasing. So, and with this strategy, they basically short the volatility, right? They say there will be nothing happening with Bitcoin, basically, in simple terms, right? So there will be no volatility, and this is what you can bet on, right, with crypto options. So, and if we hit explore more, we will go back to our original equity curve. So let's look at the current year. So again, you see the drawdowns are very limited, and in fact, drawdowns are reducing over time, but the profit is growing at the same time, right? So, and this is what makes crypto options so interesting, right? And if you scroll down below, you will see more financial indicators. So here you can see the maximum consecutive wins, which is 18, and the maximum consecutive losses is only 3, right? So, and so far this strategy was able to achieve almost 63%. So if you go to my reference trade, it's on a different account. Anyway, on my reference trade that I started on my reference account that I started on the 8th of August, I already have a profit of 29%, right? So that's an average of 10% per month, everybody. So how can you benefit from this kind of trading? So you basically sign up with bitopex.io, and you can find the link down below. So you just sign up, and then you just replenish your account. You just go to deposit, right? You choose the coin that you want to use, USDT, on, let's say, on the Tron network. Then you acknowledge that this payment will not, that you have to pay within 60 minutes. You just acknowledge, you send the money, and then you go to copy trading, you click follow, and you enter the amount you want to add to copy trading, and then you confirm. So, and the best thing about this kind of copy trading is you can get out anytime. So your liquidity is not locked for weeks, months, or years. You can get out after 7 days. So you just stay in copy trading for 7 days, and then you can pull out with no penalty, right? And 100% of your funds will be traded. And if you quit that copy trading, you get all 100% back. All you have to do is to wait 7 days. So that's basically it, everybody. I hope you enjoyed that video. And if you want to give it a try, find all the links down below. Thanks for watching. Bye.